One income, 8 children, a grocery bill that outpaced most working-class paychecks before the second week of the month even ended. By any honest math, Christmas morning should never have happened in that house. It happened anyway. Black mothers built 25 specific, deliberate financial habits to make it happen. None of them written down in any book, and every single one of them actually worked. Section 1. The Christmas Club Envelope. It started with one man. In 1909, a bank treasurer named Merkel Landis, working at the Carlyle Trust Company in Carlisle, Pennsylvania, introduced the very first Christmas savings fund. 350 customers signed up that first year. Each one saved about $28, which by today's standards would be worth around $1,000. The money was paid back out on December 1st, just in time for the holiday. That idea spread across the whole country over the following decades. Banks in small towns and big cities alike began offering their own version. A newspaper in Belvidere, Illinois, wrote in January of 1920 that the local State Farmers Bank was encouraging parents to sign their children up for a Christmas banking club to build the saving habit early. Banks in that era gave out small tokens to mark a deposit. The Dime Saving Bank of Toledo, Ohio, issued a brass token good for 25 cents toward opening a Christmas account. Other banks issued their own numbered tokens the same way. The idea behind it never changed, no matter which bank ran it. Every week, or sometimes every payday, you deposited a set amount into a special account, separate from your regular savings. 50 cents, $1, $5. On a good week, the bank locked that money away from easy access. No interest was paid on it. That was never the point of the account. The point was discipline. The rule was simple, and it never bent. You did not touch that money before the date the bank released it. Some banks charged a penalty for early withdrawal. Some wouldn't allow it at all until autumn. Everybody who kept one of these accounts understood the reason without being told. Money left sitting in a regular account had a way of disappearing. $1 meant for groceries this week, and $1 meant for Christmas in December, looked exactly the same once it was sitting in the same account. Keeping them apart was the only way to make sure December's dollar survived until December. Banks worked hard to keep people enrolled. Through the 1950s and into the 1970s, they ran newspaper and magazine ads promoting the accounts, often showing images of a warm, worry-free holiday season. A common slogan urged customers to save now and enjoy later. To sweeten the deal, banks handed out small gifts for signing up. Sometimes a calendar, sometimes a pen, occasionally a modest bit of extra interest. Many banks partnered directly with churches and schools to sign up whole groups of families at once, passing out flyers and organizing enrollment together. Radio stations carried short spots reminding people it was time to start. The habit reached its highest point in the early 1980s, when roughly 23 million Americans held a Christmas Club account, and banks were holding about $6 billion total across all of them. But nothing lasts forever, and the Christmas Club began fading not long after that peak. Credit cards had already been spreading through the 1950s and 1960s, and by the time the 1980s came around, they had become common enough that many families simply charged their holiday shopping instead of saving ahead for it. Rising inflation through the 1970s and into the early 1980s, along with new banking rules that changed how interest worked, made these low-interest, no-interest accounts far less appealing than they once were. Later, as digital banking and online shopping took over, the whole idea of a locked-away seasonal savings account started to feel unnecessary to most people. Still, for decades, this was simply how a family without much room for error made sure December never caught them empty-handed. She walked into the bank every week, made her deposit, and never once treated it as optional. It was the first bill she paid to herself, before anyone else got a chance to spend it for her. Some banks still offer these accounts today, mostly small community banks and credit unions. But they are no longer how most families fund the holidays. What they left behind was a habit. Pay yourself first, lock it away, and let the rest of the year sort itself out around it. That habit didn't only live inside a bank building, though. Sometimes it never left the house at all. Sometimes the same idea sat quietly in plain sight, hiding in something as ordinary as a coffee can on top of the icebox. Section 2. The coffee can on the icebox. To understand why it sat exactly there, you have to understand what an icebox actually was. Before electric refrigerators became common, most households used an icebox instead. It was a wooden cabinet lined with tin or zinc, packed with sawdust or cork for insulation, with a block of ice sitting inside to keep food cold. An iceman delivered fresh blocks every few days. This was the standard way to keep food cool in American homes from the late 1800s all the way through the 1930s. Electric refrigerators existed by the 1920s, but they were expensive, and it took decades for them to become the norm in every household. As late as the early 1930s, only about 8% of American homes owned one. By 1944, that number had climbed to 85%. But plenty of families, especially those without much extra money, held onto their iceboxes far longer than that, simply because a new refrigerator wasn't in the budget yet. The top of the icebox mattered, because it was flat, sturdy, and up high enough that small children couldn't reach it without climbing. That made it a natural shelf for anything a mother wanted kept safe but close at hand. The can itself was almost always an old coffee tin, emptied and washed out, because coffee came in metal cans for most of the 20th century, and every kitchen had one sitting around once the coffee inside was gone. Reusing it cost nothing. The lid usually got popped or cut just enough to slide a coin through, which turned an empty tin into a simple, homemade piggy bank in about 10 seconds. The rule was plain, and every household that kept one followed it the same way. Loose change did not stay in a pocket, a purse, or a jar on the counter overnight. It went into the can. Because keeping cash at home, rather than trusting it entirely to a bank, was a habit that ran deep in working families for real reasons. The Great Depression had wiped out banks across the country in the early 1930s, and many people who lived through it never fully trusted banks with their money again, even decades later. Families are still occasionally found today, in old houses, with cash hidden in walls, mattresses, and yes, old coffee cans, sometimes totaling thousands of dollars, left behind by relatives who grew up not trusting a bank vault the way they trusted their own kitchen. On top of that, black families in particular were, and still are, more likely than other households to be unbanked or underbanked, meaning they either had no bank account at all or had one but still relied heavily on cash and informal ways of saving. That wasn't a matter of preference. It came from a long history of banks that were harder to access, less willing to serve black customers fairly, and, in many towns, simply not an option at all. A coffee can didn't ask questions, didn't charge a fee, and didn't turn anybody away. So every day, without ceremony, the spare quarters, dimes, and nickels that came through the door went into that can, instead of disappearing into a pocket or getting spent on something small and forgettable. A quarter today, left alone, was still a quarter next month. A quarter spent on candy today was gone forever. Every child in that house understood the can was off limits long before anyone had to explain why. It wasn't a hiding place for treats, and it wasn't a toy. It was money, sitting in plain sight, disguised as an old coffee tin, quietly turning into whatever the family would need it for later. A pair of shoes before school started. A little extra for the collection plate on a hard month. A cushion for whatever emergency showed up unannounced. Because emergencies always did. Nobody wrote down what was in the can. Nobody needed to. She could feel the weight of it in her hand and know, roughly, whether it was time to start watching it more carefully or whether there was room to let it grow a little longer. This was the everyday version of saving. It didn't have a bank's name on it, and it didn't come with a passbook. It ran entirely on discipline, a steady hand, and the simple refusal to let spare change disappear before it could become something useful. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. But loose change in a coffee can could only stretch so far. When it came time to buy something bigger, something too expensive to pay for all at once, a different kind of patience took over. That patience had its own paper trail, kept folded in a purse, and updated every payday at the back counter of the five and dime. Section 3. The layaway ticket. Layaway got its start during the Great Depression in the 1930s. Money was scarce everywhere. Millions of people were out of work, and even those with a job often didn't have enough cash sitting around to pay for anything expensive all at once. Stores needed a way to keep selling, and customers needed a way to keep buying. So retailers came up with a simple fix. You picked out the item you wanted. You paid a small deposit. The store took it off the shelf and held it in the back, safe from anyone else buying it, while you kept paying toward it a little at a time. Once the full price was paid, and only then, you got to take it home. That last part mattered more than anything else. Layaway was never a way to take something home first and pay for it later. It worked the opposite way from almost every other kind of buying. The store kept the item, you kept paying. Ownership only changed hands once the balance hit zero. The deposit itself was usually a percentage of the total price, something like 10 or 20%, just enough to show the store you were serious, and to hold your spot. After that, you agreed on a schedule, weekly, every 2 weeks, monthly, if that suited the budget better. Every visit, you handed over a little more, and the clerk marked it down on a card or a slip of paper kept in a file at the back counter. The rule was simple, and every mother running a household this way followed it without exception. You never took the item home early, no matter how badly the child wanting it begged. Because the whole point of the system was patience, not shortcuts. If you could pay it off ahead of schedule, that was fine. If you needed the full stretch of weeks or months, that was fine too. What you could not do was skip the wait entirely, because skipping the wait meant going into debt, and debt was exactly what layaway existed to avoid. There was no interest charged on any of it. That was the real advantage layaway had over almost every other way of paying for something big. A credit card, once those became common, charged interest that could run anywhere from 15 to 25% or more, meaning a coat that cost $40 could end up costing quite a bit more than $40 by the time it was paid off. Layaway charged none of that. Some stores added a small flat fee to cover the cost of storing the item, but that fee stayed the same no matter how long the payments took. $40 on layaway stayed $40. It also didn't require good credit, or any credit at all. A family that couldn't have gotten approved for a store credit card could still walk into the five and dime, put $5 down on a winter coat in September, and know that by December, that coat would be theirs outright. This made layaway one of the only ways many working families could afford something bigger than a weekly grocery bill, without ever borrowing a dime from anybody. If, for whatever reason, the payments didn't get finished, the item went back on the shelf. Depending on the store's policy, the money already paid in came back in full, came back partially, or in some cases wasn't returned at all. Most families who started a layaway plan made sure that never happened. Falling short meant losing money and losing the item both, and nobody wanted to explain that to a child expecting a coat or a toy under the tree. Through the middle of the 20th century, layaway sat quietly behind the counter of nearly every department store and five and dime in the country, handling everything from winter coats to furniture to the exact kind of gift that made a Christmas morning feel bigger than the family budget should have allowed. It reached its highest point of popularity in the 1980s, right before credit cards became so widespread that most stores decided offering both didn't make sense anymore. Credit cards let a shopper walk out the same day with the item in hand, and by the 1990s, most major retailers had quietly dropped layaway altogether. It came back for a while during hard economic years, when credit tightened up, and people went looking for that same interest-free patience their mothers had relied on decades earlier. But for most of the 20th century, this was simply how you bought something you couldn't pay for all at once, and refused to owe anybody a cent extra for the privilege. She kept that folded ticket in her purse for months at a time, watching the balance shrink a little more every payday. And once that ticket was finally paid in full, there was still the matter of deciding exactly what earned a spot on it in the first place. That decision usually started months earlier, in the living room, with a thick catalog spread open across her lap and a pencil in her hand. Section 4. The Sears Wish Book. Circled in pencil Sears, had been selling through mail-order catalogs since the late 1800s, but the holiday version, the one everyone came to know by that name, started in 1933. That first Christmas book ran 87 pages, with 25 of those pages built around toys, and the rest filled with gifts for adults. It wasn't officially called the Wish Book yet. Sears customers had already been calling the big general catalog the Wish Book, or Book of Wishes, for years before that, just out of habit, and after 1933, that nickname stuck to the Christmas edition specifically. Sears didn't make it official until 1968, when the company printed the words Wish Book right on the cover. By the time it arrived in mailboxes every August or September, it was enormous. In its biggest years, the catalog ran past 300 pages, packed with everything Sears sold, which was close to everything a household could want. Toys, jewelry, tools, clothing, appliances, record players, even pianos and small houses. Sears printed millions of copies a year, and at one point built an entire printing facility in Chicago just to keep up with the demand, turning out as many as 7 million copies annually. When it landed in the house, it didn't get read quietly. It got fought over. Kids pulled it open across the living room floor, flipping toward the toy pages first, while parents waited their turn to see what the rest of the book had to offer. It was common for each child in the house to take a pencil and mark what they wanted, sometimes with their own initials next to the item, sometimes just circling the picture outright. In some households, each kid worked in a different color, so nobody could argue later about whose circle belonged to whom. The rule was clear in almost every house that owned one, and it never had to be explained twice. Circling something did not mean getting it, because a child's wish and a mother's budget were two entirely separate documents, even though they lived on the same page. She let everyone circle freely, because looking and dreaming cost nothing, and there was no reason to cut that part short. The real decision-making happened later, quietly, usually without the children in the room, when she went back through those same pages with a completely different question in mind. Not what does he want, but what can actually happen this year. This mattered more in homes stretching a single paycheck across a large family, because the wish book didn't disappear once Christmas morning came and went. It stayed useful. A page circled in October might come back into play in February when a coat needed replacing, or in June when a birthday needed a gift and nobody wanted to make a special trip to a store. The book got dog-eared and referenced across the entire year, not just the holiday season. The catalog also mattered for a reason that had nothing to do with wishing at all. For a lot of families, especially those living outside big cities or without easy access to large stores, the wish book wasn't a luxury item to flip through for fun. It was often the actual way you shopped. You picked what you wanted from the pages, filled out an order form, and either mailed it in or brought it to a local Sears store to place the order and pick it up later. Grandparents without a Sears store nearby sometimes had their orders shipped and delivered wrapped in heavy brown paper, tied shut with twine. By the 1990s, the wish book size had started shrinking, and by 2011, Sears stopped publishing it entirely, worn down by years of declining sales and competition from other stores, and, eventually, the internet. It came back briefly in 2017, but at only about 120 pages, a shadow of what it had once been. What used to arrive as a 5-pound brick of a catalog, thick enough to double as a doorstop, had shrunk down to something closer to a pamphlet. None of that mattered yet in the years this habit was at its strongest. What mattered was the ritual itself, the book landing in the mailbox, the fight over who got to look first, the pencil circles going down in hope, and the quiet second pass she made later, turning those same pages into an actual plan. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. That plan rarely stopped at what one catalog could offer, though. Once she knew roughly what Christmas could afford this year, there was still the matter of finding a little extra, fast, in case the number she landed on wasn't quite enough. And more often than people now remember, that extra money came from something as simple and as reliable as a pound of fish and a hot pan of grease on a Friday night. Section 5. Fish Fry Friday. This tradition has real roots going back to the Great Migration, when millions of black families moved from the rural South into cities like Chicago, New York, and Detroit between the 1910s and 1970s, chasing factory jobs and a life away from Jim Crow laws. What they found in those northern cities wasn't always better. A 1928 study by the National Urban League found that black families in Harlem were paying $40 to $55 a month for the exact same apartments that white families rented for $30 to $40. That kind of rent could eat up nearly half of a factory worker's paycheck. Something had to give. What families came up with was the rent party, and fish became one of its most reliable engines. Newspapers spread across the kitchen table to soak up the grease. A deep pot heating on the stove, usually filled with whiting or catfish, sometimes both, depending on where the family came from and what they could afford that week. The smell alone was often the invitation. The rule was simple, and it held in kitchens across the country. If the rent or the light bill came up short, you started frying fish by Friday. Because a few pounds of fish and a sack of cornmeal cost almost nothing next to what a plate sold for. Guests paid an admission fee at the door, bought food once they were inside, and often stayed for music and cards on top of it. In the early rent party days of the 1920s and 1930s, some hosts even printed small invitation cards, decorated with playful rhymes promising good food and better company, and passed them around the neighborhood like tickets. The whole event doubled as entertainment and survival at the same time. This wasn't charity, and nobody treated it that way. Everyone who walked through that door paid something, and everyone walked away having gotten something real for their money. A full plate, good company, and a night that felt like more than just an emergency fundraiser. The math worked because the biggest cost in the whole operation was usually just the grease. Fish itself was often cheap and easy to come by, especially for coastal or southern families used to fishing their own rivers and coastlines for generations before ever moving north. Over time, the fish fry outgrew the rent party entirely. By the 1960s and 1970s, churches had taken the same idea and built it into a steady source of income, selling fish plates on weekends to fund building repairs or church programs. Families spent whole summer weekends taking orders for fish platters, delivering them around the neighborhood, with the profits going straight into the collection plate the following Sunday. What had once quietly kept a single family from getting evicted was now openly keeping entire congregations afloat. There's an interesting wrinkle in exactly which fish showed up on those plates. Through the late 1960s and into the 1970s, one account of the tradition notes that the Nation of Islam built a strong following selling fried whiting specifically, while Baptist and Pentecostal churches leaned toward catfish, a holdover from tent revival traditions in Southern religious life. Whether or not that exact rivalry played out everywhere the same way, the larger point stands. The specific fish on the plate often said something about who was cooking it and where their tradition came from. None of this required a storefront, a business license, or a sign out front. It required a hot stove, a family willing to spend a Friday night cooking for a crowd, and a neighborhood that understood exactly what that smell coming through the window meant. Word of mouth did the rest. Nobody needed an advertisement when hunger and a good cook were both already present in the same neighborhood. It's worth remembering, too, that this wasn't only about money changing hands. These gatherings held a community together in ways that outlasted whatever bill they were originally meant to cover. Children saw their parents solve a real problem without asking anyone outside the community for help. News got passed around the room along with the plates. Recipes moved from one kitchen to another. None of that shows up on a balance sheet, but all of it mattered just as much as the cash collected at the door. She never once called herself a businesswoman for doing this. She was one every single Friday the bills demanded it, turning a pound of fish into whatever the family needed by Monday morning. Fish fries solved a problem that showed up suddenly, all at once, the week the money came up short. But some money problems were bigger than a single Friday night could fix. The kind that needed steady savings stretched out over months, not one good evening of frying. For that kind of saving, some families turned to a much older idea: one that didn't involve a bank at all, just a tight circle of people who trusted each other completely. Section 6. Throwing in. This one goes back much further than any bank record can prove, all the way to West Africa, to a Yoruba word, esusu, meaning a group of people pooling their money together. Enslaved Africans brought that idea with them across the Middle Passage, and it took root and changed names everywhere it landed. In Trinidad, people called it a susu or susu. In Jamaica, a partner. In Guyana, a box hand. In Haiti, a min. Different islands, different accents, same exact idea underneath it all. The idea itself never got complicated. A small group of people, usually family or close friends who trusted each other completely, agreed to put in the same amount of money at set times, weekly, every 2 weeks, or once a month. Each time the money got collected, one person in the group took the entire pot home. That was called getting your hand. The pot kept rotating to a different person each round, until everybody in the group had received a turn. Nobody made a profit off it, and nobody was supposed to. If 10 people put in $100 each, the pot came to $1,000, and whoever's turn it was walked away with exactly $1,000, no more and no less. The person who got their hand early in the rotation was basically getting an interest-free loan, paying the group back over the following weeks. The person who got their hand last had basically just saved the whole time, with nothing pulled out early. The rule was simple, and it held the entire system together. You paid your part on time, every single round, because your turn was coming, and everybody else was counting on it, because there was no paperwork behind any of this. No credit check, no signature, no bank teller keeping records. The entire system ran on trust between people who knew each other, and once that trust broke, the whole thing could fall apart. Somebody had to organize it, usually keeping track by memory or a simple notebook, and that person was often responsible for covering the difference if anybody in the group ever fell short. This practice mattered enormously to African American communities because, for most of American history, mainstream banks either refused black customers outright or made getting a loan nearly impossible. Between 1888 and 1934, there were roughly 134 black-owned banks operating in the United States. Today there are only about 23. For huge stretches of history, and in many places still today, a formal bank loan simply wasn't a realistic option for a black family trying to save towards something big. Throwing in filled that gap completely, using nothing but a circle of people who kept their word. It wasn't only about emergencies either. People used these rotating pools to start businesses, put a down payment on a house, cover a big family expense, or simply build up savings faster than they could alone. One account describes a man who used exactly this kind of pooled savings group, 15 people putting in $2,000 each every month, to help each member buy a business one at a time, until every single person in the group had gotten their turn. It's worth being clear about something here, because the practice has been badly misused in recent years. Real susus and partner hands never promise a profit, and they never require you to recruit new members to get your payout. Scam versions calling themselves blessing looms or gifting circles have shown up in recent years, especially targeting black communities, promising payouts far bigger than what people put in, and requiring new recruits to keep the pyramid going. Those are not the same thing at all. A real rotating savings circle only ever gives you back exactly what the group put in together, nothing more. Everyone who joined a real circle understood the honor system completely, without needing it explained. You didn't sign anything. You didn't need to. Your word, and the fact that everybody in that room would know your name if you broke it, was the only contract that existed. This kind of saving still exists today, quietly, in plenty of families and communities across the country, run the exact same way it's always been run. It never needed a bank's permission to work, and in a lot of cases, it worked better than a bank ever could have. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. Throwing in solved the problem of saving a large amount of money without ever touching a loan or a line of credit. But not every family had a circle like that to join, and even those who did still needed smaller, everyday ways to shave a little off the grocery bill every single week. For that kind of saving, the answer usually wasn't found in a circle of trusted friends at all. It was found standing right at the checkout counter, in a little booklet of stamps that most people never gave a second thought to. Section 7. The Green Stamp. Book 2 men, Thomas Sperry and Shelley Byron Hutchinson, started the whole idea in 1896, launching it at stores in Jackson, Michigan. Their company, Sperry and Hutchinson, sold stamps to grocery stores, gas stations, and department stores, who then handed the stamps out to customers as a reward for spending money. For every 10 cents spent, a shopper typically earned a stamp worth 10 points. The stamps themselves were small, printed on mint green paper, with a gummed back like a postage stamp. You licked the back and pressed it into a free booklet, one page at a time. Each booklet held 24 pages, and each page needed 50 points to fill, which meant a completely full booklet added up to 1,200 points total. The rule in most households that collected them was steady and unspoken. You never threw a stamp away, no matter how few came home from one trip to the store, because on their own, a handful of stamps looked like nothing. Stuck together in a booklet, page after page, they turned into something you could actually trade for real merchandise. The company mailed out a thick catalog, sometimes close to 180 pages, showing everything a filled booklet or a stack of booklets could get you. One filled book might get a porcelain lamp. Several books together could get a bicycle. Whole rooms of furniture, dishware, tools, and toys sat in those catalog pages, priced not in dollars, but in how many books you needed to bring in. This habit reached deep into American households. During the 1960s and 1970s, close to 80% of homes in the country were collecting these stamps in one form or another. At the peak of it, Sperry and Hutchinson was printing more stamps every year than the entire United States Postal Service printed in postage, and mailing out around 35 million catalogs annually. The company ran roughly 800 redemption centers across the country, essentially showrooms full of merchandise, where a family could walk in with their filled booklets and walk out with something they'd been building toward for months. Kids were often part of the ritual, not just bystanders to it. Licking stamps and pasting them into the booklet pages became something the whole family did together after a grocery trip, sitting at the kitchen table sorting stamps by value before pressing them down. It didn't feel like a chore. It felt closer to a game, one where patience was the only real requirement, and the payoff was something you got to pick out yourself. The stamps did carry an actual cash value if you wanted it that way. 1,000 stamps could be redeemed for $1.67 in cash. But almost nobody bothered with that option, because the catalog always offered something worth more to the people saving toward it. Nobody was collecting stamps to eventually cash out a small pile of coins. They were collecting them because somewhere in that catalog was a clock radio, a set of dishes, or a bicycle that felt entirely earned by the time it arrived. The whole system started slowing down in the mid-1970s as the American economy struggled and discount stores began offering lower prices up front instead of rewards later. Why wait months collecting stamps for a discount when a store down the road was already selling the same item cheaper today? Inflation made matters worse, shrinking the real value of what a filled book could get you. By the late 1980s, fewer than 100 retailers still bothered participating, a steep fall from the 100,000 businesses that had once been involved at the program's height. Even so, for the decades it thrived, the Green Stamp book represented something families understood without ever discussing it directly. Money spent on groceries didn't have to just disappear the moment it left your hand. A small reward could be built out of ordinary spending you were already going to do anyway, one licked stamp at a time, turning routine errands into slow, steady savings towards something the family actually wanted. Stamps rewarded you after the money was already spent. But there was another habit, sitting quietly on the kitchen table every Sunday, that worked the opposite way completely, catching the money before it ever left your hand at all. That one didn't come from a company mailing out catalogs. It came from a pair of scissors and a folded newspaper. Section 8. Clipping the coupons. Coupons started long before anyone was clipping them at a kitchen table. In 1887, an Atlanta businessman named Asa Candler, co-owner of the Coca-Cola Company, handed out handwritten tickets offering a free glass of Coca-Cola, which sold for 5 cents at the time. Between 1894 and 1913, roughly 1 in every 9 Americans redeemed one of those tickets, adding up to about 8.5 million free drinks. Other companies noticed. C.W. Post tried a similar trick in the early 1900s, offering a penny off a box of cereal. Coupons stayed a fairly small marketing gimmick for the next few decades. That changed with the Great Depression in the 1930s. Frugality stopped being optional for most families and became a way of life, and coupons, which had been around for nearly 50 years by then, suddenly became something people leaned on out of pure necessity. In 1940, big city supermarkets began printing their own in-store coupons for the first time, trying to pull shoppers back from the smaller neighborhood grocers people had started favoring for convenience. The habit kept growing for decades after that. By 1965, close to half the country was using coupons regularly. Sunday newspapers, filled with printed inserts, some pages devoted almost entirely to coupons for groceries, fast food, and household goods. By 1975, that number had climbed to about 3 out of every 4 Americans. By the mid-1970s, roughly 65% of households were clipping coupons on a regular basis, and the number kept rising into the following decade. The rule in most households that kept up with this habit was steady and specific. Coupons got sorted the moment the newspaper arrived, before anything else happened to that stack of paper. Because a coupon sitting forgotten in a drawer, past its date, was worth exactly nothing. A coupon clipped, sorted, and carried into the store on the right day was real money staying in the family's pocket instead of leaving it. 10 cents off here, 15 cents off there. None of it looked like much on its own. Multiplied across a week's worth of groceries, and repeated every single week of the year, it added up to a noticeable dent in the grocery bill. Sunday became the day this habit lived in most homes, mainly because that was the day the biggest coupon inserts arrived, tucked into the thickest edition of the week's newspaper. After church, or sometimes during the sermon's aftermath at the kitchen table, out came the scissors. The newspaper got spread flat and the cutting began, page by page, with a pile of clippings building up as the radio played low in the background. Sorting mattered just as much as clipping. Coupons got organized by the store where they'd actually get used, or sometimes by the day of the week a particular trip was planned, tucked into an envelope so nothing got left behind, or forgotten by the time she reached the register. Nobody wanted to stand in line digging through a loose pile of paper while a cashier and a line of customers waited. By the mid-1970s, the coupon world got a technical boost. In 1974, a grocery store in Ohio scanned the very first product using the newly invented barcode, called the UPC, or Universal Product Code. Within a few years, coupons started using that same barcode technology, which made checking a coupon's value faster and more accurate at the register. What had once required a cashier to read fine print and do math by hand became a quick scan instead. None of that changed what the habit actually meant inside the house. A dime saved on canned vegetables was a dime that didn't have to come from somewhere else in an already tight budget. 15 cents off soap, repeated across 8 or 10 trips a month, quietly freed up enough money to matter by the time the whole month was totaled up. This wasn't extra. It was treated as part of doing the shopping correctly, the same way checking prices or comparing sizes was simply part of doing the shopping correctly. Nobody in that house saw the Sunday ritual as unusual or difficult. It was simply how the newspaper got used before it became something to wrap dishes in or line a drawer with. The scissors came out, the coupons came off the page, and the grocery bill for the coming week got just a little smaller because of it. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. Clipping coupons only worked once she'd already made it to the store though, and by then she'd usually spent months building a different kind of relationship with the people running it. Long before any of that Sunday cutting began, there was often already an understanding in place at the smaller stores in the neighborhood. one that didn't involve paper coupons or a printed discount at all, but something closer to trust, written down in a little notebook kept behind the counter. Section 9. The corner store book buying groceries on credit was nothing unusual in America once. In the 1800s and well into the 1920s, the grocer's ledger book was a common way of shopping for nearly everyone, black or white, in the city or out in the country. You picked up what you needed, the grocer wrote it down, and you paid it off when money came in. That changed for most Americans in the 1930s. Big new chain grocery stores like the A&P started offering low prices in exchange for cash only, no credit at all. Customers who paid cash even earned stamps they could trade in for gifts. The same basic idea that would later become the green stamp booklets sitting on kitchen tables. This shift toward cash-only shopping let chain stores keep prices lower, since they weren't carrying the risk of unpaid debts. For most white families, this became the new normal, and the neighborhood grocer with the ledger book slowly faded out. For black families living in cities, that shift barely touched their everyday lives at all. Many black neighborhoods had only one grocery store, sometimes none within easy reach, and without competition between stores, prices in those neighborhoods often stayed high, no matter what a family could afford. Even black families who owned a car and could technically drive to a cheaper chain store outside the neighborhood usually couldn't get credit there if they needed it. The credit relationship that white America was moving away from was still, for many black families, the only option available. The rule at these stores was understood by everyone who shopped there, without a single conversation needed to explain it. You paid what you owed as soon as the money came in, usually on payday, and the store kept feeding your family in the meantime. Because the alternative, going without groceries until payday, simply wasn't survivable in a house with children to feed. The corner store filled that gap the same way it had filled it for generations before. One family's name written into a notebook kept behind the counter. The system itself was almost embarrassingly simple by today's standards. No paperwork, no signature, no credit check. A customer picked up bread, milk, meat, whatever the week needed, and the store owner wrote the amount down next to that family's name in a book kept under or behind the register. No receipt usually changed hands. When payday came, the family settled up, sometimes paying it all off, sometimes paying down part of it, and letting the rest carry forward to the next round. This arrangement wasn't free of problems, and everyone who lived through it knew that too. Because these grocers weren't competing against a chain store nearby, they could charge more for the exact same items a supermarket sold cheaper across town, using the higher prices to cover the risk of extending credit to families who might fall behind. Arguments over what exactly was owed weren't unusual, especially since customers often didn't get a written receipt to check their own math against the grocers. Quality could be an issue too, with some corner stores selling less fresh meat and produce than a big chain store several miles away. Even so, the relationship ran on something deeper than a fair price. The grocer knew your family by name. He knew when work had been slow that month, and he extended credit anyway, because turning a hungry family away helped nobody, including his own business. In some neighborhoods, black-owned corner stores existed too, run with the same care, and often held up by their communities as a point of pride. Even while these black-owned businesses frequently faced the same unfair markups from wholesalers that made it harder for them to keep prices as low as they wanted to. Every family that ran a tab this way understood the arrangement completely, and never once questioned why it worked the way it did. There was no alternative sitting nearby offering something better, and the grocer holding that book was, in a very real sense, one of the only forms of banking a family like this had regular access to at all. By the middle of the 20th century, this way of shopping was quietly disappearing everywhere else in the country, replaced by supermarkets, parking lots, and cash registers that didn't know your name. But in neighborhoods where the supermarket never bothered to build a store, the corner grocer and his book stayed exactly where they'd always been, feeding families through the lean week before payday arrived. The corner store handled the groceries, but it couldn't handle everything a family needed to plan for. There was one bill that came due only once, unpredictably, and covered something far heavier than a week of missed meals. For that, a different man came to the door entirely, dressed for business, carrying his own small book, collecting a few coins at a time, towards something nobody wanted to think about too often. Section 10. The debit man at the door. This kind of insurance had a name in the business: industrial insurance, though most people who bought it just called it burial insurance. It got that first name because it was collected right at the door, in small weekly amounts, the same way a factory collected a worker's wages. The idea was simple: a premium of just a few cents a week, paid at the door instead of mailed in, made coverage possible for families who could never have paid a big lump sum all at once. Black families needed this option more than almost anyone, because mainstream white-owned insurance companies either refused to sell them policies at all or charged steep markups, often justified using flawed and racist claims about black health and life expectancy. In 1884, a formerly enslaved Massachusetts lawmaker named Julius Caesar Chappelle pushed through the first law in the country, banning insurers from using race to set premiums or coverage. 9 other northern states followed his lead soon after. But laws on paper didn't erase discrimination in practice, and black families across much of the country still found it nearly impossible to buy affordable coverage from white companies well into the 20th century. So black communities built their own. One of the most important was founded in Durham, North Carolina in 1898 by 7 black businessmen, including a barbershop owner named John Merrick, who had been born enslaved. Their company, eventually named North Carolina Mutual Life Insurance Company, specialized specifically in industrial insurance. It grew from less than $1,000 in income in 1899 to $250,000 by 1910, and it became known as the largest black-owned business in the country, headquartered in a city so full of thriving black-owned enterprises that people began calling it the Black Wall Street of America. The rule that made this whole system work was simple, and every family who carried one of these policies followed it without fail. You paid that agent at the door before you paid almost anything else that week. Because missing a payment meant the policy could lapse, and a lapsed policy meant a funeral, with no way to pay for it. That was a debt the whole family would be left to carry, on top of grief that was already hard enough to carry alone. A funeral without a policy behind it could bankrupt a family that had spent years staying just barely ahead of every other bill. The agent's job depended entirely on this weekly rhythm. Because premiums were collected every single week rather than mailed in monthly or yearly, the company barely needed to track a family's address, changes the way other insurance companies did. The agent came to you, wherever you lived, book in hand, wrote the payment down, and moved on to the next house on the route. For many families, that agent became a familiar, expected face, someone who showed up on the same day almost every week for years. Nobody in the house treated this as some grim or uncomfortable subject. It was simply responsible. Death was going to come for everyone eventually, and pretending otherwise didn't make funerals free. Paying a few cents a week toward that inevitable cost was viewed the same way as paying toward rent or groceries, just another regular obligation that kept the family's dignity intact when the worst eventually happened. Companies like North Carolina Mutual didn't stop at burial policies either. Profits got reinvested directly into the black communities they served, funding real estate ventures, a black-owned bank called Mechanics and Farmers Bank, and jobs for black professionals at a time when most white companies wouldn't hire them at all. Other black-owned insurance companies followed similar paths in cities across the country, including in Chicago, where firms like Supreme Life built the same kind of trust with weekly paying policyholders. This entire industry began to shrink after the civil rights movement opened up more choices for black customers, as white-owned insurance companies that had once refused black business started competing for it instead. North Carolina Mutual survived for over a century, but by 2019 it had run into serious financial trouble, and the company was finally liquidated in the years that followed, closing out a chapter of black economic history that had lasted more than 120 years. For the families who paid that debit man every week for decades, none of that eventual decline mattered yet. What mattered was a simple promise, kept weekly, coin by coin. Whatever else happened, the family would be able to bury its own with dignity, and nobody would have to go begging or borrowing to make that happen. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. Paying toward a funeral was one kind of responsibility a family carried quietly, without complaint, for years at a time. But not every obligation in the house came due on a schedule set by somebody else. Some of the heaviest responsibilities were the ones a mother created for herself. Decisions made in silence, usually noticed by nobody until decades later, when a grown child finally looked back and understood exactly what they had been looking at all along. Section 11. The hand-me-down line. Long before feed sacks became fashionable, they were just packaging. In the early 1800s, flour and animal feed traveled in wooden barrels. As the century went on, companies switched to cotton sacks instead, because sacks were cheaper and lighter to ship. Farm women noticed those sacks weren't just trash once emptied. The cotton inside them, once cleaned and taken apart, could become dish towels, undergarments, curtains, and eventually, full dresses and shirts. Companies figured out what was happening and leaned into it. By 1925, the George P. Plant Milling Company in St. Louis was packaging its Gingham Girl flour in dress-quality red and white checked fabric, and openly advertising that fact as a selling point. Other companies followed. Bemis Brothers, Fulton Bag and Cotton Mills, and Percy Kent Bag Company all started producing sacks in colorful printed patterns by the end of the 1920s, some even hiring textile designers straight out of New York City to create prints women would actually want in their homes. Then came the stock market crash of October 1929, and everything about this practice changed in scale. With money and store-bought fabric both suddenly scarce for millions of families, sewing your own clothes from whatever material was available stopped being unusual and became, for a huge share of the country, simply how you dressed your family. A 100-pound sack of flour or feed yielded roughly a square yard of usable fabric, and since most dresses needed about 3 yards, women went looking for 2 or 3 sacks in the exact same pattern, trading with neighbors or sending their husbands and sons back to the feed store, specifically to dig through the pile for matching prints. The rule in households doing this was clear, whether anyone said it out loud or not. Nothing with fabric left in it got thrown away, and every last scrap got sewn into something before it was considered finished being useful. Because buying new fabric cost real money that most families simply didn't have to spare, while a feed sack that had already done its job hauling chicken feed across town cost nothing extra at all. 3 yards of dress fabric bought new from a catalog in 1927 ran about 60 cents. The same 3 yards, salvaged from 2 or 3 flour sacks already sitting in the house, was essentially free. This same logic ran straight through to hand-me-down clothing generally, not just feed sacks specifically. A coat or dress that started on the oldest child in the family got worn until it no longer fit, then passed down to the next child in line, then the next, hemmed and re-hemmed and mended along the way, until there was truly nothing left to salvage from it. Wasting anything with more wear still in it, whether it was a garment or a flour sack, ran against the entire logic of a household stretching one income across many children. There was an early sensitivity around wearing sack fabric, and it's worth being honest about that. In the earliest years of this practice, some families worked hard to disguise where the fabric had come from, soaking off printed company logos, dyeing the material, and adding ribbon or buttons to make a homemade dress look more like something bought in a store. Nobody wanted their family's financial situation announced across their child's chest by whatever brand name had been printed onto that sack, but that stigma faded fast once the Depression made this practice nearly universal across rural and working-class America. By the 1930s, sewing with feed sacks had shifted in the public eye from an embarrassing mark of poverty into something closer to a badge of resourcefulness. Home economics programs and national publications started printing instructions and patterns specifically built around feed sack dimensions. National sewing contests crowned a cotton bag sewing queen, celebrating the same skill that had once been something families quietly tried to hide. The tradition didn't stop when the Depression ended either. Cotton stayed in short supply during World War II, since so much fabric was being funneled into military uniforms, so feed sack sewing actually picked back up, rather than fading away. It carried on well into the late 1940s and 1950s, with major department stores like Macy's and Sears even stocking sackcloth items so that city families could get in on a practice rural families had already perfected. The habit only really tapered off in the early 1960s, as feed companies shifted over to cheaper paper packaging that couldn't be sewn into anything at all, whether it came from a hem-down coat passed between three brothers, or a dress cut from a chicken feed sack traded carefully for the matching pattern. The underlying idea never changed. Clothing in a house like this had a full life to live before it was allowed to be finished, and every single person in that house understood exactly which stage of that life their own clothes were currently in. Clothes weren't the only things stretched this far past their first use. Food in that same kitchen followed almost the exact same rule, and nowhere was that more obvious than what happened to a single Sunday chicken by the time Wednesday rolled around. Section 12. Sunday dinner, Monday's leftovers. The tradition of an oversized Sunday meal goes back much further than most people realize, all the way to slavery itself. Enslaved people typically received their weekly food provisions on Saturday night, which meant Sunday was naturally the day a larger meal became possible. That timing carried forward for generations, becoming, as one scholar of Black Foodways put it, a practice that continued with only minor changes in many African American households long after slavery ended. Sunday held this meaning for a second reason too, one tied directly to freedom rather than provisions. From slavery all the way through much of the 20th century, Sunday was frequently the only day Black workers weren't required to labor, at least not until late in the afternoon. Black churches built on that reality, often serving dinner right after worship ended, a practice sometimes called dinner on the grounds. This served several purposes at once. It raised money for the church, it kept the congregation together a little longer, and it made sure that anyone struggling to put food on their own table that week still got a full plate. Because of this history, Southern Black families traditionally ate Sunday dinner early, often around 3 in the afternoon, right after church let out, rather than waiting until evening the way many other American families did. The rule in a house feeding many children off one income was straightforward. Whatever got cooked on Sunday had to be big enough and versatile enough to still be feeding the family by Wednesday. Because buying fresh meat every single day of the week simply wasn't something the budget could support. A whole chicken, a pot of greens, a pan of cornbread, and a pot of beans or rice, cooked with real care on Sunday, could be portioned out and reworked into new meals for days afterward, without anyone in the house feeling like they were eating leftovers in a lesser way. This is really where the deeper roots of what's now called soul food come from. During slavery, the food given to enslaved people was mostly starchy and cheap. Cornmeal, rice, sweet potatoes, and whatever cuts of meat were left over, after better cuts went elsewhere. People made do by hunting, foraging, and growing what they could to round out those rations, and they used every part of an animal that was available to them, not just the meat. That habit of wasting nothing carried directly into the way families cooked for generations afterward, whether or not anyone in the kitchen ever thought of it as a historical inheritance. Even the term most people use for this food today, soul food, didn't exist as a widely known phrase until 1963, when writer Alex Haley used it while recording the life story of Malcolm X. Before that, it had simply been the food Black families cooked, generation after generation, without needing a special name for it. By the time families were living through the middle of the 20th century, the practical genius behind Sunday dinner was fully in motion in kitchens across the country. A whole roasted or fried chicken on Sunday didn't disappear after one meal. The meat pulled off the bone could go into a pot of rice or a sandwich on Monday. What was left of the carcass, along with the bones nobody thought twice about saving, went straight into a pot of water to simmer down into broth, turning into soup by midweek. Collard greens or mustard greens cooked low and slow on Sunday left behind a seasoned liquid at the bottom of the pot, called pot liquor, which itself got saved and used to season beans, rice, or cornbread later in the week. Nothing with flavor left in it got poured down the drain. This wasn't viewed as scraping by or eating scraps. It was simply good cooking, the same care and seasoning applied to a Wednesday bowl of rice and gravy as had gone into Sunday's chicken itself. Respecting every part of the meal, from the meat to the bones to the liquid left behind in the pot, was treated as basic kitchen skill, not deprivation. Sunday dinner also did something no other meal in the week could quite manage. It pulled the whole family back together after days spent scattered at work, at school, or at church, giving everyone a chance to sit down, eat well, and reset before the week ahead started all over again. The meal fed the household in more ways than one, and every single person at that table understood the difference between eating and truly being fed. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. Stretching one Sunday chicken across an entire week only worked because of what went into that pot in the first place. And more often than people now realize, what went into that pot wasn't the good cuts of meat at all, but the parts the butcher counter sold for almost nothing, transformed by nothing more than seasoning, patience, and a recipe passed down from somebody who had learned to make cheap food taste like a celebration. Section 13. Beans, rice, and cornbread. The pairing of beans and rice runs far deeper into history than any single American kitchen. Rice itself was a staple crop across parts of West Africa, long before slavery, grown so widely that early European traders sometimes called that stretch of coastline the Rice Coast. When enslavement forced Africans onto ships bound for the Americas, that knowledge of rice cultivation came with them, and slave traders specifically sought out people who already knew how to grow and manage it. Beans and peas made that same journey, arriving as part of the food traditions enslaved people carried with them, even as everything else was taken. Louisiana gave the pairing one of its clearest historical shapes. Beginning in the early 1800s, thousands of refugees fled the Haitian Revolution for New Orleans, some free, some still enslaved, bringing Haitian dishes with them, including a version of red beans and rice. That dish took root and became tied to a very specific day of the week, Monday, known historically as Wash Day, when clothes still had to be scrubbed by hand in large tubs, a task that could eat up most of a day. A pot of beans could go on the stove in the morning and needed only occasional checking while the wash got done, simmering into a full meal by the time the last shirt went up on the line. Traditionally, the pot got its flavor from the bone of Sunday's leftover ham, so almost nothing from the previous day's dinner went to waste. The rule in households that leaned on this pairing was consistent, no matter which part of the South a family came from. The cheapest food on the table got the exact same care and seasoning as anything more expensive would have received. Because beans and rice weren't treated as a lesser meal simply for being affordable. They were treated as good cooking, full stop. This mattered enormously for families feeding many children on very little money, since dried beans and rice cost a fraction of what fresh meat did, and both could be bought in bulk and stored for weeks without spoiling. Black-eyed peas held their own specific place in this same tradition, most famously in a dish called Hoppin' John, made from black-eyed peas, rice, onions, and smoked pork such as ham hocks, traditionally eaten on New Year's Day for good luck in the year ahead. Field peas more generally, boiled simply with salt pork, onions, and a bit of seasoning, showed up on Southern tables regularly as an everyday, unremarkable staple, the kind of dish nobody thought to write down a recipe for, because everybody already knew it by heart. Cornbread rounded out the meal for a reason that went beyond taste alone. Corn had been a foundational crop for enslaved people from the earliest days of slavery, cheap, easy to store, and filling in a way that stretched further than meat ever could. A pan of cornbread cost pennies to make, and served an entire family, soaking up pot liquor from a pot of greens, or scooping up beans in a way that made the whole plate feel complete, even when the meal itself had cost almost nothing. None of this was viewed by the families cooking it as scraping by. During slavery, enslaved people were often given only the cheapest parts of the pig and the plainest starches, and they responded by hunting, growing gardens, and combining what little they had, with skill and seasoning, until it tasted like something worth sitting down for. That instinct, wasting nothing and seasoning everything with intention, carried forward for generations, long after slavery ended, becoming the backbone of what people now call soul food. The pairing also carried a quiet kind of resilience that went beyond the kitchen. During the Great Depression, red beans and rice became even more essential in New Orleans specifically, because it was cheap, filling, and could easily stretch across several meals for a family with very little money to spare. Long after those hard years passed, the dish stayed exactly where it had always been, on tables every Monday, not because anyone had to eat that way anymore, but because the tradition itself had become worth keeping. A pot of beans on the stove asked for almost nothing from the person cooking it, once the seasoning was right and the timing understood. But not every economical meal in that kitchen came from a bag of dried beans or a sack of rice. Some of the richest flavor in the entire week came from cuts of meat the butcher counter practically gave away, the parts nobody else in town seemed to want at all. Section 14. Fatback, neck bones, and the cuts. Nobody wanted. This tradition has one of the darkest origins on this whole list, and it deserves to be told honestly. During slavery, enslavers kept the best cuts of meat for themselves, the upper portions of the leg and back, the ham, the roasts, the parts that gave rise to the old phrase, high on the hog. What got passed down to enslaved people were the parts left over: pig's feet, ears, jowls, tails, hocks, the fatty strip along the back called fatback, and the intestines, later known as chitterlings or chitlins. These rations were low in quality and often thin on nutrition, handed out as a form of control on many plantations, with slaveholders sometimes pointing to the rations themselves as false proof that enslaved people were being treated well. What happened next is where the real story lives. Enslaved cooks took those scraps and, drawing on skills and seasoning traditions carried over from West Africa, turned them into food that actually tasted good. Slow cooking, heavy seasoning, and careful preparation transformed intestines, fatty trimmings, and bony cuts into dishes with real flavor and staying power. The result was good enough that some accounts say enslavers eventually wanted a taste of what they had once considered scraps. The rule that carried forward from this history, generation after generation, was simple. No part of the animal went to waste, and no cut was considered too humble to cook with real care. Because after slavery ended, most black families remained poor, and the parts of an animal that were still cheapest to buy were the same parts their ancestors had been given by force. Buying offcuts and offal wasn't a choice made for flavor alone. It was often the only meat a family's budget could actually afford. Families supplemented what they could buy by farming, hunting, and fishing, bringing in rabbit, squirrel, and freshwater fish like catfish to round out meals that would otherwise have been thin. Fatback earned its keep by doing double duty in the kitchen. This fatty, cured, salted strip of pork wasn't usually eaten on its own. It got dropped into a pot of collard greens, mustard greens, or beans, where it slowly rendered its fat and salt into the cooking liquid, seasoning an entire pot of vegetables for pennies. A single piece of fatback could season several meals across a week, making it one of the most economical ingredients in the whole kitchen. Neck bones worked on a similar principle. Slow cooked for hours until the meat fell away from the bone, they turned a cheap cut into a rich, gravy-covered dish that could stretch across a pot of rice or a pan of cornbread. What the neck bones lacked in size, they made up for in patience. The same patience that turned every cheap cut in this tradition into something worth sitting down for. Chitlins carried the heaviest history of all, and the most complicated relationship with it. Some food historians note that eating an animal's intestines wasn't invented by American slavery at all. Written recipes for the dish appear in a British cookbook from the 1700s, meaning it was already a known food in Europe before enslavers in America ever handed the intestines over to the people they held captive. Still, its association with slavery in America is real and well documented, and it remained popular well into the Jim Crow era, showing up regularly at black-owned restaurants and gatherings alongside the rest of what would eventually be called soul food. By the time the middle of the 20th century arrived, these dishes had become deeply woven into Sunday dinners, holiday tables, and everyday cooking across Black households, regardless of whether a family needed to stretch every dollar or not. Chitlins in particular became closely tied to New Year's celebrations, served alongside black-eyed peas and the rest of a full soul food spread, a tradition many families kept up for the ritual and the memory as much as for the food itself. None of this got treated as second-rate cooking inside the homes that made it. A pot of neck bones simmered with the same care as any other Sunday dish. Fatback seasoned a pot of greens with the same attention a more expensive cut of meat would have received elsewhere. What started as rations handed down under some of the worst conditions imaginable became, through generations of skill and repetition, some of the most flavorful and recognizable cooking in the entire country. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. Getting a pot of neck bones or greens to taste right took real-time standing over a stove, and that same patience showed up in plenty of other places around the house that had nothing to do with cooking at all. Some of it went into a stack of somebody else's shirts, pressed and folded on the porch after the family's own laundry was already done for the night. Section 15. Taking in ironing. By the time Reconstruction ended in the South, laundry work had become the single most common job held by Black women outside their own homes. In Atlanta specifically, by 1880, more Black women worked as laundresses than in any other type of domestic labor, representing over half of the entire Black female workforce in the city. The work itself was brutal. A washerwoman made her own soap from a mix of lye, starch, and wheat bran, since store-bought soap cost money she didn't have to spare. A halved beer barrel often served as her wash tub. She hauled gallons of water by hand from wells, pumps, or hydrants, then scrubbed each garment, boiled it, rinsed it, wrung it out by hand, hung it to dry, and finally pressed it with heavy metal irons heated over a fire, all before folding it and delivering it back to the customer. The work week typically ran from Monday until the last clean load went out the door on Saturday, and all of it happened on top of caring for her own household and children. Pay for this backbreaking labor was low almost everywhere. Many washerwomen earned only $4 to $8 a month for a full week of this work, week after week, with no days off built into that number. The rule that governed this kind of work was plain and unbending. The family's own laundry got done first, and only after that was finished did another household's clothes get taken in for pay. Because that extra income, small as it was, often made the difference between falling short on rent and making it through the month. A neighbor's shirts pressed and folded on the porch after dark represented real money earned in hours most people were already asleep, added on top of a day that had already been full from morning to night. This labor eventually produced one of the most remarkable and least remembered moments in American labor history. In July of 1881, 20 Black washerwomen in Atlanta, many of them formerly enslaved, met in a local church and formed a union they called the Washing Society. They were tired of being paid whatever a customer felt like offering, with no floor and no consistency from one household to the next. They organized around a single demand, a uniform rate of $1 per 12 pounds of laundry, applied evenly across the entire city. Word spread through Black churches and door-to-door canvassing, and within 3 weeks, the Washing Society had grown from 20 members to 3,000. They called a strike on July 19th, timed deliberately to land just before Atlanta hosted a major event that fall, the International Cotton Exposition, which meant the city desperately needed its laundry service running smoothly for all the visitors it was expecting. City officials pushed back hard. They threatened fines, attempted to tax anyone caught organizing under the Washing Society's name, and arrested several of its leaders on charges of disorderly conduct. None of it broke the strike. The washerwomen held their ground, going door to door to keep support strong, even recruiting the small number of white laundresses working in the city to join their cause. By August, the strike had produced real gains for the women involved, an outcome historians consider a genuine, if largely forgotten, success. What made this possible in the first place was the exact kind of work being described here. Individual women, taking in laundry one household at a time, quietly building both an income and, eventually, a shared understanding of their own collective power. Nobody involved in scrubbing shirts on a Tuesday night was thinking about labor history in the moment. They were thinking about rent, about their own children's clothes needing to be finished first, about the next basket of somebody else's wash waiting to be picked up. This work continued in various forms for decades after that strike, long after washing machines started appearing in wealthier homes, and eventually in working-class ones too. For many families, taking in laundry, ironing, or sewing for a neighbor remained one of the most reliable ways to stretch a household budget that never quite had enough room in it. Ironing another family's shirts required patience and a hot iron, but it wasn't the only skill a woman in that same house could turn into steady income after everyone else had gone to bed. Some of the most dependable extra money in the whole neighborhood came from something even simpler: a comb heated on the stove and a line of women waiting patiently in somebody's kitchen every single Saturday. Section 16, the Kitchen Table Beauty Shop. The story of the hot comb and black hair care runs through two women who never quite got equal credit for what they built. Annie Turnbow Malone founded a company around 1900 that manufactured a product called Wonderful Hair Grower, and later opened Poro College in St. Louis, a school built specifically to train black women in hair and scalp care. She hired mostly women as sales agents, called Poro agents, ranging in age from 16 to 80, teaching them her system of scalp cleaning and hair nourishment. One of Malone's own agents was a woman named Sarah Breedlove, who had spent years working as a laundress and struggling with her own hair loss. Breedlove eventually broke off and built her own line of products, rebranding herself as Madam C.J. Walker. Her method, known as the Walker system, combined a scalp treatment, a pomade called Glossine, and heated iron combs used to smooth and straighten hair. It's worth being clear about something often misunderstood. Walker did not invent the hot comb itself. What she did was improve its design with wider teeth and, more importantly, build an entire training and sales network around it. By 1919, her company had employed tens of thousands of women, mostly black, as sales agents she called beauty culturists, making her one of the most successful black-owned businesses of the entire early 20th century and earning her recognition as America's first self-made female millionaire. Both Malone and Walker sent their trained agents out to work directly in customers' homes rather than only in formal salons, since heating tools and washing hair required water and a stove, resources every kitchen already had. This is really the root of where the kitchen table beauty shop tradition comes from. Professional-grade hair care, taught and sold by women, delivered in ordinary living rooms and kitchens across the country. The rule in households that ran this kind of setup was understood without a sign or a schedule needing to be posted anywhere. Saturday belonged to hair, and whoever had the skill and the hot comb did the work for whoever needed it. Because hiring an actual salon wasn't always affordable or even available nearby, especially for families stretching every dollar across a household of children. A woman with steady hands and a comb heated on the stove eye could do the exact same job a salon charged real money for, at a fraction of the price, right there at her own kitchen table. The process itself carried real risk alongside the reward. The hot comb had to be heated, usually right on the stove, then pressed carefully through the hair section by section. Anyone who sat through it, or who did the pressing themselves, remembers the smoky smell that filled the kitchen and the tense stillness required to avoid getting burned by a comb hovering just above the scalp. It took real skill to get it right, and a woman known in her neighborhood for having that skill rarely lacked for customers on a Saturday. Payment for this kind of work operated on the same informal, trust-based system as so much else covered here. No appointment book, no storefront, no sign hanging outside. A neighbor came by, sat down, got her hair pressed and paid whatever felt fair for the time and skill involved, sometimes in cash, sometimes through an informal trade of services with another family in the neighborhood. It's worth noting that hair straightening itself has always carried a complicated history within the black community, one that Walker herself pushed back against during her own lifetime. She insisted repeatedly that her goal was healthy hair, not straightened hair, once stating plainly that she considered herself a hair culturist, not someone in the business of straightening. Others in the community, including the scholar W.E.B. Du Bois, defended the hot comb against critics who saw it as bending towards standards that weren't originally the community's own. That debate never fully resolved, and it didn't need to resolve for the kitchen table beauty shop to keep running exactly as it always had. What mattered most to the woman running her Saturday kitchen operation wasn't a debate happening in newspapers. It was a hot comb, a line of customers, and steady cash earned using nothing but a skill she'd learned from someone else and passed along in turn to whoever came up under her. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. This kind of skill, learned once and turned into steady income for decades, showed up in more places around a household than just a kitchen chair on a Saturday. Sometimes it showed up outside entirely, in a small patch of dirt behind the house, where an entirely different kind of patience turned a summer's worth of work into a winter's worth of groceries already paid for. Section 17. The garden outback home canning, as a general practice in America, goes back to a French confectioner named Nicolas Appert, who in 1809 discovered that sealing food in glass jars and heating it kept the food from spoiling, even though he didn't fully understand why it worked. Decades later, Louis Pasteur figured out the science behind it. The mason jar itself, patented by John L. Mason in 1858, made the whole process practical for ordinary households, and by the 1880s, companies like Ball were manufacturing them for home use. For Black families specifically, garden-based self-sufficiency had a direct champion in George Washington Carver, who joined Tuskegee Institute in 1896 at Booker T. Washington's invitation to lead its agricultural department. Carver spent decades researching crop rotation and pushing Southern farmers, many of them black sharecroppers trapped in cycles of cotton debt, to grow soil-restoring crops like peanuts, sweet potatoes, soybeans, and cowpeas, instead of relying on cotton alone. He published over 40 practical bulletins packed with recipes and preservation advice for poor farmers, work aimed specifically at helping families grow and keep more of their own food. Reaching farmers who couldn't travel to Tuskegee proved difficult, so in 1906, Carver helped design a mobile classroom called the Jessup Agricultural Wagon, named for the New York banker who funded it. Loaded with plows, seeds, milk testers, and demonstration materials, the wagon rolled out to rural black communities directly, teaching farmers new techniques for growing and preserving crops right on their own land. Within a year, the U.S. Department of Agriculture adopted the idea nationally. A Tuskegee graduate named Thomas Monroe Campbell became the first official black extension agent in the country, running the wagon and eventually overseeing what became known as Negro extension work across Alabama and neighboring states. The rule that governed a household running a garden this way was simple, whether Carver's bulletins had ever crossed their kitchen table or not. What grew in the backyard in summer became what filled the pantry all winter, because a garden meant the family wasn't buying everything it ate at full price from a store. Collard greens, tomatoes, string beans, okra, and sweet potatoes cost almost nothing to grow beyond the labor of tending them, and every jar of vegetables canned in August was one less trip to the grocery store come January. This habit reached its widest national scale during both world wars, when the government actively encouraged what it called victory gardens, urging families to grow food at home so more of the commercial food supply could go to soldiers overseas. Propaganda posters told housewives to can everything they could. Home canning peaked in 1943, with more than 4 billion jars canned in homes and community canning centers across the country that year alone. The practice had already been building for decades before that, though thanks in large part to the Smith-Lever Act of 1914, which created a national cooperative extension service specifically to teach rural families, including through home demonstration agents, updated methods for growing and preserving their own food. The actual canning process demanded patience and precision. Vegetables had to be picked at the right time, cleaned, packed into jars, and processed either in boiling water or, for foods low in acid like most vegetables and meats, in a pressure canner. Since the USDA determined by 1917 that pressure canning was essential to prevent dangerous bacteria from surviving inside a sealed jar. Done correctly, a jar sealed with a satisfying pop and could sit safely on a shelf for months. Done carelessly, it could spoil, or, worse, become dangerous to eat. None of that difficulty stopped families who depended on their gardens from doing it right, year after year. Every jar lined up in a cellar or a pantry represented hours of real work stretched across an entire growing season, condensed down into something that could feed the family through the coldest, leanest months of the year, when nothing fresh was growing outside at all. Home canning eventually declined nationally after World War II, as refrigerators became common in most households, and supermarkets made fresh and frozen food available year-round without the labor of growing or preserving it yourself. But for families who had built their household budget around a garden and a shelf of mason jars for generations, that shift didn't happen overnight, and the habit of growing what you could, to avoid buying what you didn't have to, stuck around in plenty of kitchens long after the rest of the country had moved on to the grocery store. A well-stocked pantry took care of the kitchen, but it did nothing for the family's spiritual life, and that mattered just as much in a household built around faith and community. Some of the most consistent giving in the entire year happened not at a grocery counter or a garden gate, but in a small paper envelope, handed out at church, filled in slowly across the weeks by whoever's name was printed on the front of it. Section 18. The Usher Board Envelope. In most black churches, the usher board isn't a minor volunteer job. It's considered one of the 4 great ministries of the church, ranked right alongside preaching, teaching, and music. Ushers safeguard the entrances, the aisles, and the financial offerings during service, working in near silence through hand signals, and practiced positioning so the flow of worship never gets interrupted. They're often the first ones at the church house on Sunday morning, and the last to leave, staying behind to gather up whatever's been left in the pews after everyone else has gone home. Unlike the ushering role in many white churches, black church usher boards have historically included both men and women serving side by side, and membership on the board is often exceeded only by the music ministry in terms of sheer size. Many churches maintain separate senior, junior, and youth usher boards, giving multiple generations of the same family a role to grow into over the years. Photographs of usher boards in matching uniforms date back at least to the early 20th century, with formal groups documented in black churches by 1930. The rule that governed giving through this system was steady and unspoken. Whatever you pledged into that envelope, you paid, filling it in gradually across the weeks until it came due. Because the church had carried families through hardships that no other institution had reliably shown up for. During slavery, the church was one of the only places enslaved people could gather and worship somewhat freely. In the Jim Crow era, and through the civil rights movement, black churches organized boycotts, voter registration drives, and mutual support networks that reached far beyond Sunday service. Giving back through the envelope wasn't viewed as a transaction. It was viewed as returning something to the one institution that had never once turned the family away. Ushers themselves became deeply tied to fundraising, not just to the mechanics of seating people or handling the collection plate. Once a year, most churches set aside an entire day, called Ushers' Day, specifically to honor the usher board and raise money on its behalf. On that day, the host church's ushers actually got a rare day of rest, while ushers from several guest churches came in and did all the work instead, ending the day with a ceremonial grand march. The fundraising model behind it ran on a simple principle passed down through generations of usher boards. Help your neighbor's fundraiser today, and your neighbor's usher board will return the favor at your own church's event later in the year. Usher boards leaned on each other constantly this way, supporting one another through anniversaries, conventions, and even large funerals. Beyond Ushers' Day, individual churches typically ran dozens of small internal accounts tied to different auxiliary groups, choirs, usher boards, women's missionary societies, men's clubs, each responsible for its own portion of fundraising and financial support for the church as a whole. It wasn't unusual for a single large church to be quietly running 25 or 30 separate small bank accounts across a city, each one tied to a different group's ongoing giving and fundraising efforts. Church anniversaries and homecomings functioned as another major giving occasion built into this same system. Members who had moved away, sometimes clear across the country, would return for these events specifically to give financially and reconnect, with the amount given often tied directly to the recognition and pride the church placed on that member's return. The older and more established the church, the more its members took pride in showing up and giving generously on those days. None of this giving felt burdensome to the families doing it, even when money at home was tight. The envelope handed out on a Sunday wasn't just a request for money. It represented a family's stake in an institution that had fed them, protected them, organized on their behalf, and given their children somewhere safe to belong, since long before any of them were born. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. Church giving ran on a schedule everyone understood and respected, without needing much explanation. But not every form of mutual support in a family's life came through a Sunday envelope. Some of the most important financial protection a family carried came from an entirely different kind of due, paid weekly to a completely different institution, one built specifically because the world outside the church had refused black families the same protection for generations. Section 19. The Mutual Aid Due. This tradition predates the Civil War entirely, and its roots run through the earliest free black communities in the country. In 1787, a group of freed black Philadelphians formed the Free African Society, a mutual aid organization built to care for the sick and support members in times of need. It's considered the earliest forerunner of black insurance and mutual aid organizations in America, and it set a pattern that would repeat itself across the country for the next century and a half. That pattern deepened after the Civil War, when formerly enslaved people, cut off almost entirely from white banks and insurance companies, began forming their own fraternal orders. One of the earliest and most influential was founded in Baltimore in 1867 by a formerly enslaved woman named Mary Prout. Originally called the United Order of St. Luke, it began as a women's mutual aid society focused on caring for the sick and providing for the burial of the dead, before eventually admitting men and growing into what became known as the Independent Order of St. Luke. Around the same time, another formerly enslaved man named William Washington Brown founded the Grand United Order of True Reformers in Richmond, Virginia, one of the most influential black fraternal organizations in the entire country. These orders weren't simple burial clubs. They became engines of black economic self-sufficiency, eventually launching banks, newspapers, and retail stores, all built on the same foundation: dues collected regularly from members, pooled together, and used to protect the whole group. The rule that held these organizations together was simple and absolute. You paid your dues to the lodge, faithfully, and in exchange, the lodge stood behind you and your family when hardship or death arrived, because there was no other safety net available. Segregation forced black communities to look inward for support, since white-run banks and insurance companies either refused black customers outright or offered them worse terms. A member who fell sick received support from the order. A family that lost someone received help covering the cost of a dignified burial, something that could otherwise bankrupt a household in a single stroke. The Independent Order of St. Luke, under the leadership of Maggie Lena Walker starting in 1899, became one of the clearest examples of how far this model could grow. When Walker took charge, the organization had only a little over $30 in its treasury and hundreds of dollars in unpaid debts. Within just a few years, she rebuilt it into a national organization with tens of thousands of members across more than 20 states. She once told a gathering of the order that the answer to the community's economic troubles was to put their own money together, use it among themselves, and turn their own nickels into dollars, rather than depending on outside institutions that had never served them fairly. By the 1920s, the Independent Order of St. Luke had grown to include over 100,000 members and an insurance fund worth roughly $8 million. It went on to launch the St. Luke Penny Savings Bank in 1903, a department store, and a weekly newspaper, all funded and run through the same structure of dues paid faithfully by ordinary members, most of them working people with very little money to spare individually, but tremendous collective strength when pooled together. These fraternal orders operated on principles that went beyond simple insurance. Members attended regular lodge meetings, paid their dues in person, and understood the arrangement as something closer to a covenant between neighbors than a business transaction with a distant company. If a member fell behind due to illness or hard times, the order often extended grace rather than cutting them off entirely, something no commercial insurance company of the era would have considered doing. This entire system of black fraternal orders declined over the course of the 20th century, as more banking and insurance options gradually opened up to black customers, and state regulations changed how fraternal societies were allowed to operate financial institutions. But for generations, these dues, collected faithfully at the neighborhood level and paid into an organization built and run by and for black communities, provided the only real financial protection many families had ever known. Every family that paid into one of these orders week after week understood something simple that never needed to be spelled out. Nobody outside the community was coming to catch them if they fell, so the community had built its own net, member by member, dollar by dollar, and it had held for generations because everyone paying into it believed in exactly the same thing. Money moving through a lodge or a lodge account represented one kind of family protection, built slowly over years of steady dues. But sometimes a family needed money fast, not years from now, and there was no lodge meeting scheduled soon enough to help. For that kind of emergency, some families turned to something far more immediate: a hot stove, a pan of grease, and whatever was already sitting in the icebox that could be turned into a plate and sold out the back door before the night was over. Section 20. Selling dinners out the back door. Black women selling home-cooked food for money is a tradition that stretches back to slavery itself. In the Caribbean and South America, enslaved women were sometimes allowed to garden and sell what they grew at market, generating income even though the system they lived under gave them almost nothing else. In New Orleans specifically, both enslaved and free black women worked for generations as street vendors, called marchandas, selling coffee, rice fritters known as callas, and pralines from carts, stalls, and street corners throughout the city. Some of these women earned enough through selling food to eventually purchase their own freedom, or the freedom of their children. Pralines became one of the most recognizable examples of this tradition. The candy itself originated in France, but it was black women in Louisiana who transformed it, swapping in local pecans and adding milk or cream to create the version people now think of as a New Orleans praline. Selling them required almost no starting money at all, since pecans were often free for the taking, which made praline selling one of the few businesses a woman with no capital could still start on her own. These women became some of the very first female entrepreneurs in the city, doing business at a time when women, especially black women, had almost no formal economic rights or opportunities elsewhere. The rule that governed this kind of income was practical and unwritten. If you could cook something people wanted, you had a business, no storefront required. Because a hot meal, sold quietly out of a home kitchen, could turn into rent money, grocery money, or whatever the week's shortfall happened to be, without needing a business license, a loan, or anyone's permission. Word of mouth did the advertising. A neighborhood that knew who could really cook never needed a sign to find her. This tradition reached one of its most powerful moments during the Montgomery bus boycott in the mid-1950s. A woman named Georgia Gilmore, who had already been fired from her job as a cook for supporting the boycott, turned her own home into what amounted to an underground restaurant and fundraising operation. She organized other black women cooks into a group she called the Club from Nowhere, a name chosen so the money's origin couldn't be traced back to anyone who might face retaliation for it. They sold plates of food and delivered them to boycott meetings, beauty shops, doctors' offices, and cab stands, funneling the proceeds directly into supporting what became the longest sustained protest of the civil rights movement, lasting more than a year before the Supreme Court finally ruled bus segregation unconstitutional in December of 1956. Gilmore's home kitchen didn't stop working after the boycott ended. It kept operating as a meeting place for civil rights organizing in the years that followed, joining a small but important network of Black-owned eateries across the South, including Dooky Chase's in New Orleans and Pascal's in Atlanta, that served both food and as genuine safe spaces for activists during some of the most dangerous years of the movement. Most women running this kind of business never touched anything as historically significant as a bus boycott. Their customers were neighbors, co-workers, and men coming home from a factory shift who didn't feel like cooking that night. A foil-covered plate of smothered chicken or oxtails, priced fairly and cooked well, was reliable income that required nothing more than skills already sitting in the kitchen and a stove that was going to be lit that evening regardless. The women who built this tradition, from the praline vendors of colonial New Orleans to the home cooks running an unofficial dinner service decades later, rarely got called businesswomen in their own time. Historians studying this history have noted that these same women were often reduced in public memory to demeaning stereotypes, rather than recognized as the entrepreneurs they actually were. Despite building real, sustained income streams out of nothing but a stove and a reputation for good cooking, none of that recognition mattered much to the woman actually doing the cooking. What mattered was a full pot on the stove, a full pocket of cash by the end of the night, and a neighborhood that trusted her enough to keep coming back. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. Selling plates covered whatever a single night or a single week demanded, but some of the biggest expenses a family faced weren't weekly at all. They came once a year, involved dozens of relatives at once, and required an entirely different kind of coordinated effort, one where no single household was expected to carry the whole cost alone. Section 21. The Family Reunion Pot. The Black family reunion tradition traces directly back to the end of slavery. After emancipation in 1863, formerly enslaved people began an urgent, widespread search for family members who had been sold away and separated, sometimes across state lines, sometimes decades earlier. People placed newspaper ads, questioned anyone who had worked on nearby plantations, and relied on records kept by the Freedmen's Bureau, all in an effort to find relatives torn apart by a system that had never recognized their family bonds as legally protected in the first place. Historians consider this one of the largest mass searches for family members in American history. The tradition deepened again during the Great Migration, between roughly 1916 and 1970, when millions of Black families left the South for cities in the North and West. Families that had once lived within walking distance of each other suddenly found themselves scattered across the country, and reunions became one of the main ways relatives stayed connected across that new distance. By the middle of the 20th century, these gatherings had grown from small, intimate affairs into large, organized events, featuring cookouts, worship services, talent shows, and oral storytelling, meant to pass family history down to a new generation who hadn't lived through the separation firsthand. The rule that made these gatherings possible, year after year, was simple and consistent. No single household carried the cost alone, and every branch of the family contributed something toward the whole. Because feeding, housing, and organizing dozens or sometimes hundreds of relatives in one place cost real money, and expecting one family or one host to absorb that cost entirely would have made the whole tradition unsustainable within a generation. Splitting the load was what allowed the reunion to keep happening year after year, decade after decade. In practice, this meant every family unit typically brought something to the table, sometimes literally. One family might bring the meat for the grill, another covered drinks. A third took charge of a portion of the venue rental or the cost of matching commemorative T-shirts that became a hallmark of the modern Black family reunion, printed with the family name and the year, worn by everyone from the oldest relative down to the newest baby. Larger reunions required real budgeting, with someone in the family typically responsible for tracking contributions and expenses across venue costs, food, activities, and whatever else the gathering required that year. Cooking itself often became a shared, overnight labor split among multiple relatives, rather than a single person's burden. One account of a Southern family reunion describes the older men and women in the family staying up through the night before the event, splitting a whole hog down the middle, filling it with sausage, onions, peppers, potatoes, and corn, then stitching it closed with twine before it went on the grill for the big day. That kind of labor, like the cost of the reunion itself, was never expected to fall on just one person. Some reunions grew directly out of a specific moment of need or loss within the family. One well-documented reunion tradition began in 1970, started by two black women, cousins, who wanted to stitch their scattered family back together after decades of separation caused by the Great Migration. What began as a modest gathering organized by those two women grew into a tradition that has continued for generations since, funded and carried forward the same way it started, by every branch of the family showing up and contributing their part. This financial pooling wasn't unique to family reunions on their own. It echoed a pattern that showed up across the Great Migration more broadly, where black families sometimes formed migration clubs specifically to pool money together, buy train tickets at reduced group rates, and travel north in groups rather than facing the journey and its costs alone. The instinct to combine limited resources into something the whole group could actually afford ran through both the migration itself and the reunions that later worked to repair what that migration had scattered. Every relative attending a reunion built this way understood their role without needing much explanation. Showing up meant contributing, whether that contribution was money, food, labor, or all three, and nobody expected to attend a gathering of this size and simply be served without also being asked to give something back to it. A family reunion took planning and pooled resources spread across dozens of relatives, all working toward one shared weekend. But some of the most important financial decisions a household ever made weren't shared with anyone at all, not even close family. Some money in the house existed specifically because it had been folded away quietly, kept somewhere nobody would think to look, meant to stay untouched until the day it was truly needed. Section 22. Money folded inside the Bible. To understand why the Bible became a hiding place for cash, it helps to understand what that book already meant inside a black household for generations before anyone tucked a dollar bill between its pages. Long before it held money, the family Bible held the family's entire recorded history. Starting in the late 1700s, it became common practice across America for a Bible to include dedicated pages for recording births, marriages, and deaths. And by tradition, a Bible was often given as a wedding gift, specifically so a newly married couple could begin filling in that family record themselves. For black families, this practice carried a weight that went far beyond sentiment. Throughout the South, state governments did not begin systematically recording births and deaths until well into the 20th century. In some states, not until the 1910s. Before slavery ended, enslaved people rarely appeared in any official record at all, beyond a first name jotted into a bill of sale, a will, or a list of property. Family Bibles are, in fact, one of the only surviving documents that recorded the names, and sometimes the ages and parentage, of enslaved people at all. One archive alone holds over 100 family Bibles from North Carolina, containing at least one documented name of an enslaved person, in some cases listing 10 or more family members across generations. After emancipation, black families continued this practice with even more intention, since public record-keeping remained sparse and unreliable for decades. One family's Bible, described by a Maryland newspaper, tracked births, marriages, and deaths across 67 years, beginning with a wedding in 1919 and continuing until a final entry in 1986. This is the context that matters here. The Bible wasn't simply a religious object sitting on a shelf. It was the single most trusted, most carefully guarded document a family owned, often the only proof a family had of its own existence across generations that the outside world had refused to officially record. Something treated with that much reverence and safeguarded that carefully was, naturally, also the safest place many families could imagine keeping their most important physical possessions, including cash. The rule in a household that used the Bible this way was understood without needing to be spoken aloud. Certain money did not get touched, did not get mixed in with grocery money or spending money, and stayed folded exactly where it had been placed until a real emergency called for it. Because keeping cash outside of a bank was, for enormous numbers of American families, not a matter of preference, but a matter of necessity or hard-earned caution. Distrust of banks ran deep, and for good reason. The bank failures of the Great Depression in the early 1930s wiped out the life savings of people who had trusted financial institutions with everything they had, and that memory didn't fade quickly. Families who lived through it, or who grew up hearing about it from parents who had, often kept some portion of their money at home from then on, in mattresses, in walls, in coffee cans, and in more than a few documented cases, discovered decades later, still sitting exactly where a relative had hidden it, sometimes totaling thousands of dollars nobody in the family had known existed until it was found while clearing out a house after a death. For Black families specifically, this caution wasn't only inherited from the Depression, it was layered on top of generations of being turned away from banks entirely, or offered worse terms than white customers received for the exact same services. Being unbanked or underbanked, meaning a family either had no bank account at all or had one but still relied heavily on cash for daily life, has remained measurably more common among Black households than white households for as long as researchers have tracked the statistic. Without a reliable, trusted bank relationship, a family needed somewhere else entirely to keep money that absolutely could not be lost, stolen, or spent by accident. The Bible, already treated as sacred, and already the one object in the house nobody would ever think to search carelessly or discard, filled that role naturally. Practically speaking, the money kept this way tended to be different in character from the coffee can savings covered earlier in this list. The coffee can held loose, everyday change, meant to accumulate steadily towards something specific, like a pair of shoes or a bit of extra Christmas money. The money folded into the Bible was usually something else, a small reserve, larger and more deliberate, meant to sit completely untouched unless a genuine emergency arrived. A sudden illness, an unexpected funeral cost that a burial policy didn't fully cover. A moment where every other source of money in the house had already been exhausted, and something still had to be paid. Everyone in a house that kept money this way understood the difference between the coffee can and the Bible without ever needing it explained. The coffee can was for saving towards something. The Bible was for surviving something. Reaching into it wasn't treated lightly, and a child old enough to know it was there also generally understood, without being told twice, that it wasn't for asking about. There was also something practical about the specific hiding spot itself that shouldn't be overlooked. A large family Bible, often kept prominently displayed in the living room rather than hidden away, was heavy, thick, and full of pages that nobody outside the family had any reason to flip through carefully. A burglar looking for money in a hurry was far more likely to check a jewelry box, a dresser drawer, or a purse than to open a Bible and fan through hundreds of pages looking for folded bills. The safest hiding places have always been the ones that don't look like hiding places at all, and a book already sitting in plain sight, already treated with a kind of quiet reverence by everyone in the house, fit that description perfectly. This practice persisted for generations, carried forward even as banking access slowly improved for Black families over the course of the 20th century. It wasn't stubbornness or a refusal to modernize. It was a reasonable, well-earned response to a financial system that had spent generations proving itself untrustworthy to entire communities, paired with a genuine, practical need to keep some money completely safe from theft, loss, and the everyday temptation to spend it on something smaller than what it was actually meant for. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. The Bible held the family's most guarded money, set aside and hoped never to be needed at all. But not every act of financial discipline in that household involved money being protected for the family's own benefit. Some of the most important sacrifices a mother made in that same house were ones she never protected for herself at all, choices that showed up quietly, every single night, at the exact moment her own plate got filled last and smallest. Section 23. Her plate was always smaller. Researchers have a name for this pattern now, even though the mothers living it never needed one. Food scientists and sociologists call it maternal deprivation, referring specifically to a mother's decision to skip a meal entirely or eat noticeably less so that her children could eat enough. It shows up so consistently across studies of food-insecure households that it's treated as a documented, measurable behavior rather than an occasional exception. One nationally recognized organization focused on food security has found that mothers struggling with hunger frequently sacrifice the quality and quantity of their own food, specifically to protect their children from feeling that same hunger. A separate academic study comparing food-insecure mothers to food-insecure fathers, childless men, and childless women found that mothers facing food insecurity carried a distinctly higher risk of weight-related health problems than any of those other groups. A pattern researchers connect directly to the way mothers allocate food within the household, feeding children first and adequately, then eating whatever calories remain, often nutritionally poor, filling food bought because it was cheap rather than because it was healthy. Government data backs up how common this situation has been across American households generally. According to the United States Department of Agriculture, roughly 16.5% of households with children have experienced food insecurity in recent years. That number climbs sharply for single-mother households, which experience food insecurity at almost 3 times the rate of married couple households with children, nearly a third of all single-mother homes affected. And within that already difficult reality, one specific finding stands out clearly across multiple studies. Caregivers, overwhelmingly mothers, are the ones who most often absorb the shortage personally, rather than pass it on to the children in their care. Researchers studying this pattern describe it plainly as a trade-off mothers make deliberately, weighing their own hunger against their children's, and consistently choosing to protect the children. The rule inside a household living this way was never written down or spoken aloud, and it never needed to be, because every child eventually understood it without being told. Everyone else's plate got filled first, generously, before hers was filled at all. Because feeding her children fully was never treated as a task she was completing. It was treated as the entire point of everything else she was doing. A mother in this position wasn't simply managing a food budget. She was making a series of quiet, repeated decisions, meal after meal, night after night, about whose hunger mattered more in that moment. And she made the same choice, essentially every time. This pattern carries a heavier history for Black families specifically, reaching back well before modern food insecurity research existed to measure it. During slavery, food rations given to enslaved families were already thin and low in nutrition to begin with, distributed by enslavers who controlled every aspect of what a family was allowed to eat. Enslaved mothers, working full days of forced labor while also caring for children, often faced exactly this same impossible math on an even harsher scale. Not enough food to go around, and a fierce determination that whatever there was would reach the children first. That instinct didn't disappear when slavery ended. It carried forward through sharecropping, through the Great Migration, and into every decade since, showing up in kitchens where a mother serving dinner filled every child's plate to satisfaction before finally making her own from whatever remained in the pot. The health consequences of this pattern are also well documented, even though the mothers living it rarely framed their choice in those terms. Research has consistently linked food-insecure mothers to higher rates of obesity, not because of anything about their appetite or discipline, but because the food left over after children were fed adequately tended to be the cheapest, most calorie-dense, least nutritious food available, eaten inconsistently, and often in a state of real physical and emotional stress. Researchers studying this connection describe caregivers who make these kinds of repeated trade-offs, skipping meals, eating less, choosing cheaper food for themselves, as carrying what's sometimes called toxic stress, a sustained physiological burden that takes a real toll on the body over years of repetition, whether or not the person carrying it ever named it that way. None of this showed up as complaint inside the household. A mother serving dinner this way didn't announce what she was doing, and she generally didn't want her children to notice it either. Feeding her family wasn't a burden she described out loud. It was simply what she did, every night, in the same order, without asking for acknowledgement. Children growing up inside this pattern often didn't register it at the time. A smaller portion, a plate made mostly from what was left in the pot rather than the best cuts. A mother who always seemed to say she wasn't very hungry tonight. These details blended into the ordinary texture of dinner and rarely stood out as remarkable while it was happening. It's typically only much later, often as an adult with a household and a food budget of their own to manage, that someone looks back and finally does the math their mother had been quietly doing every single night for years. That delayed recognition is, in many ways, exactly what the pattern was built to produce. A mother making this choice generally wasn't trying to be recognized for it. She was trying to make sure her children never had reason to notice hunger at all, which meant absorbing whatever shortage existed herself, as quietly and completely as possible, so the burden of it never touched anyone else at that table. This particular sacrifice sat at the very center of everything else covered so far. The coffee cans and the layaway tickets and the Susu circles and the fish fry Fridays. Every other habit on this list existed, in some way, to protect against exactly this outcome, to build enough of a buffer that a mother would never have to choose between her own plate and her children's. And when the buffer wasn't quite enough, when the system still came up short in a given week, this was the fallback that absorbed whatever gap remained. Not a system at all, but a person, deciding quietly and repeatedly that the shortage was hers to carry. Feeding her children came first at the dinner table, every single night, without exception. But that same instinct extended past food, into every corner of what the family wore, owned, and kept for years past, when it should have worn out. Nowhere was that more visible than in a single coat, bought carefully, meant to survive winter after winter of a growing child, long after any other family would have simply gone out and bought a new one. Section 24. The One Good Coat. The idea of building clothing to survive a growing child, rather than replacing it season after season, goes back to a specific set of tools and techniques that home sewers relied on for well over a century. The first commercially successful home sewing machine came from Isaac Singer in 1851, and it changed what an ordinary household could manage at home. Before that, most clothing was either made to order at real expense or sewn entirely by hand. Then, in the 1860s, a man named Ebenezer Butterick introduced graded paper patterns, meaning patterns that came pre-sized, rather than requiring a woman to have the specialized skill of resizing a pattern herself. That single innovation opened home sewing, including children's clothing, to millions of women who had never had the training to do it before. One specific technique that came directly out of this world of home sewing was something called a growth tuck. Rather than hemming a dress or a pair of pants at the exact length a child needed today, a skilled seamstress would fold extra fabric up into the hem itself, stitching it down in a neat, deliberate tuck, sometimes several tucks in a row. When the child grew taller, instead of buying an entirely new garment, the tuck simply got let down, releasing the extra fabric that had been folded away from the very beginning and adding real length back to the hem without a single new stitch of fabric needed. The same idea applied to pants, where cuffs were sometimes deliberately left long and folded up, meant to be let down gradually as a child's legs grew longer year by year. This wasn't an accident of poor planning. It was intentional design, built directly into the garment before it was ever worn for the first time. A mother making or buying children's clothing with growth built in from the start was thinking multiple seasons ahead, planning for a child's body that hadn't finished growing yet, rather than solving the problem only when it eventually became too small. The rule that governed this kind of purchasing and sewing, whether the coat came from a tailor, a department store, or a mother's own sewing machine at the kitchen table, was consistent. Buy or build for the child 2 years from now, not just the child standing in front of you today. Because a coat sized exactly right for right now would be outgrown within a single winter, and buying a new one every single year was simply not something most family budgets could absorb. A coat purchased with room to grow, on the other hand, could realistically stretch across several winters, getting taken in at the sleeves or the waist in the early months, and gradually let back out as the child filled into it over time. This principle extended beyond sewing techniques into how families actually shopped for something as significant as a winter coat. A quality coat cost more upfront than a cheap one, and that upfront cost mattered enormously to a family stretching a single paycheck. But a well-made coat, taken to a tailor for periodic adjustment rather than replaced outright, held up through years of wear in a way a cheaper garment simply couldn't. This is the same underlying logic that governed layaway purchases covered earlier in this list. Pay more carefully, over more time if necessary, for something built to last, rather than spending less now on something that would need replacing again within months. Tailoring itself played a real, ongoing role in keeping a single coat useful across multiple years of a child's growth. Taking in a waist, lengthening sleeves, adjusting a hem, these were all standard adjustments a local seamstress or tailor could handle for a modest fee, far cheaper than buying an entirely new coat outright. A coat with a lining and structured seams took more skilled labor to alter than a simple, unlined garment, which is part of why families favored well-constructed pieces from the start. A poorly made coat couldn't be adjusted the same way, since cheap construction often didn't leave enough seam allowance or fabric to work with when it came time to let something out. This same instinct toward preserving quality fabric across years, and even across generations, shows up clearly in the broader history of home sewing. Before ready-made clothing became widely affordable, high-quality fabric represented a genuine investment, and families passed expensive dresses and coats down through multiple generations, having them altered and restyled to fit new bodies and new fashions, decades after the original garment was first sewn. Historians studying 19th-century clothing have found dresses constructed from fabric that was originally woven and cut into a completely different garment 50 or 60 years earlier, restyled and reworn by a different family member entirely. The instinct to preserve quality material rather than discard it once it no longer fit exactly wasn't new to any single decade. It ran through generations of families who understood that good material, cared for properly, could serve far longer than its first owner alone. None of this meant a family bought coats casually or often. Quite the opposite. A coat purchased with this level of intention, whether on layaway, saved for gradually, or bought outright after careful consideration, was treated as a real decision, not an impulse purchase. The coat had to fit not just the child standing there in the store, but the child who would still be wearing it 2 winters from now. Taller, broader in the shoulders, needing sleeves let out, and a hem dropped by then. Buying too small, or buying cheap simply because it was less money today, meant facing the exact same problem again within a single year, which in the long run cost the family more money, not less. A single coat, purchased and maintained this way, could realistically outlast 3 or 4 winters of a child's growth, moving from slightly too big in the first season to a perfect fit by the second or third, and finally handed down to a younger sibling once it was outgrown for good, continuing the same cycle covered earlier in this list under the hand-me-down line. Nothing about this process happened by luck. It happened because someone in the household had thought carefully, months or years in advance, about exactly how long that coat needed to last, and exactly what it would take, in fabric, in tailoring, and in patience, to make sure it did. Before we move on, if you're enjoying this analysis, please consider subscribing. It helps the channel tremendously. A coat handled this carefully represented a kind of long-term thinking that touched almost everything in a household, stretching one income across many children. But not every act of careful planning in that same house was ever meant to be seen or explained. Some of the most significant financial decisions a mother ever made were the ones she deliberately kept from her own children, choices made quietly, absorbed entirely by her, so that whatever it had cost her to make a particular Christmas happen would never once cross her children's minds. Section 25. The Christmas She Never Explained. Research into how parents handle financial hardship during the holidays has documented a consistent pattern across countless families, one that goes well beyond simple gift buying. Psychologists studying this dynamic have found that a parent's sense of self-worth often becomes tightly wound up with how good of a Christmas she can manage to provide. So tightly that many parents will work themselves to exhaustion rather than tell their children the plain truth about the family's finances. The American Psychological Association has found that 38% of people report increased stress, anxiety, or depression stretching from Thanksgiving straight through the new year, driven directly by financial pressure tied to the holiday season. That number reflects a burden carried almost entirely out of sight, absorbed quietly rather than announced at the dinner table. This pattern shows up clearly in how families have historically funded Christmas across generations, using nearly every method already covered in this list, often stacked together in the same household during the same difficult year. A Christmas club envelope filled in weekly at the bank, a layaway ticket for the winter coat, paid down slowly at the counter of the five and dime, extra plates sold out the back door on a Friday night, when the fish fry money needed to stretch a little further than usual. A quarter jar on top of the icebox, watched carefully as December approached. None of these methods worked alone, most of the time. They worked stacked on top of each other, one system covering the gap left by another, until the total finally added up to enough. The rule that governed this final stretch toward Christmas was the most quietly enforced rule of the entire year. Whatever it cost her to make it happen, in money, in extra hours, in things she went without herself, the children never found out the real number. Because a child carrying the knowledge of exactly what a parent had sacrificed to fund a holiday gains nothing from that knowledge, except worry. And a mother who had already spent the entire year protecting her children from exactly that kind of worry wasn't about to hand it to them wrapped up under the tree. Researchers studying this dynamic have found that children who watch a parent handle financial stress with visible strain tend to absorb that stress themselves, developing worse coping skills than children whose parents manage to shield them from the weight of it. Whether or not any mother running this operation had read that research herself, she was already living by its conclusion, instinctively. This meant taking on whatever extra work the season demanded, without necessarily naming it as sacrifice. An extra shift picked up in November. A side job doing hair, or ironing, or selling plates, pushed a little harder in the weeks leading up to the holiday than it normally ran the rest of the year. A Christmas club check, collected in full from the bank, exactly when it was needed most, timed perfectly to cover what the rest of the year's saving hadn't quite managed to close on its own. None of these individual pieces looked remarkable on their own. A coffee can here, a layaway ticket there, an extra plate sold on a Friday night. None of it, taken alone, told the full story of what it actually took to make a specific Christmas happen in a specific year when money was tighter than usual. Only the mother running the entire operation knew the full total, the number of Fridays she'd stood over a hot stove a little longer than usual, the number of times she'd told herself she wasn't hungry so someone else could eat more, the exact balance she'd watched creep toward its goal week after week without missing a single deposit. Presents appeared under the tree in years when, by any reasonable accounting, there should not have been money for presents at all. No explanation accompanied them, no mention of what corner had been cut, what had been sold, what had quietly gone without that year to make the math work out. The children woke up, found what they'd hoped for waiting for them, and moved straight into the joy of the morning, without a single thought spared for how it had gotten there. That silence wasn't an oversight. It was the entire point of everything that came before it. Every habit on this list working together toward a single outcome. Children who never once had reason to feel the weight their mother was actually carrying. The coffee can, the layaway ticket, the Susu circle, the fish fry, the mutual aid due, all of it existed to produce exactly this result. A Christmas morning that looked effortless because someone had worked relentlessly, for months, to make it look that way. Only much later, usually well into adulthood, with a household and a holiday budget of her own child's own to manage, does anyone who grew up inside this system actually do the math their mother had been doing all along. It's only then that the coffee can, the layaway ticket, and the quiet extra shifts stop looking like separate, unremarkable habits and start looking like exactly what they were: a coordinated, relentless, entirely uncelebrated effort to make sure a child never once felt what the household was actually going through. She never once explained any of it. She never needed to. The explanation was never the point. The point was that the explanation was never required at all, because she had made absolutely sure of that, every single year, long before anyone thought to ask. If you enjoyed this video, make sure to subscribe. Thanks for watching, and I'll see you in the next one.